Hello, all you market traders and profit takers. This is your Forex University professor at yourforexuniversity.com. We're in for another treat watching the foreign currency exchange for the week ending of September the 19th, 2014. Let's go in here and take a look and see what we've got. We're going to do a little different today. We're going to review the week basically starting out looking at 4-hour charts to see the motion that took place during the week because we already pretty much were certain about the directions and the sentiment of the markets themselves. So let's look at the Aussie here. We're starting here, and you can see it did its retracement move a couple of days into the week right here with that spike and hitting that resistance around the 9106 area. And we got the little tweezer top in there, reversed it, and came on back down to finish off the week as it should have. Here, a lot of people probably got excited when they thought that everything was going to go flying high. Um, well, here again, let's take a look at why we don't get too excited too quick. Look at this. Look over here at the beginning of this move to the downside. Look at the trend line. Look at how oh man. Okay, and even if you had a running line or a trend line that was moving faster, such as starting it from here and creating a running line or something, there's your next stop, which lines up with this stop down here this week, right here. Now look, nothing closed above this running line until this candle here, and it did not break a high, and it did not close above the original trend line. I'm not saying that it never happens where the close never does it. It's going to do that every time that this happens. No, but it didn't happen this time. There's your signal. Hint, hint. Okay. And besides, look, let's go back to the weekly chart for just a second. I mean, come on. Everybody that knows anything about trading knew that we had the high probability of bearishness, looking for a retracement to hit some level that would allow us to work our way back down. This trend line is in the way because we've moved to a weekly chart. But there you have it. Bearish. We said it last week. We made the announcement that this is now bearish territory on the Aussie, and we've continued on with bearishness here with the euro. This is the 4-hour chart on the euro. Notice that we never made it past this value area right here. Got to the top of it, and that was the end of actually didn't quite make it, but it got in there just for a minute. Had some rejection, and down the euro went. No signs of taking. Now, here's one thing you might have tried. For those of you who were hoping for bullishness, hoping for this 28.98 area of the GAN level to hold, this was your warning sign. Let me make sure I'm doing this just like it should be. Yeah, okay. On this candle right here, obviously that's an obvious sign that it's not bullish anymore. And at that point, okay, you look for a retracement. And you would have gotten it at this 50%, the 382. Both had a retracement level for you to finish out your week. On Friday, the end of Thursday, beginning of Friday, that's where you did it. And you would have been okay, made a profit. Let's move over here to the pound, which had a sensation of having a strong move. And we talked about how that was likely, that we would have that happen with the pound, that it was the most likely to have a move to the upside, which it did, and did not actually start turning back until the last of the week, the end of the week on Friday, which was here. But it did finally hit the resistance area that it needed to find to work its way back down. Let me put in a trend line. There were a few fakes there, like right here. It just barely got below it, but it just kept coming back. Well, let's see, what was it that actually held it? There's some couple more fakes here to the downside. Well, that's the original move right there, the original trend line. So actually, it would have started. I'm sorry, I'm trying to recall some things that here. This is where a lot of the faking took place. Like here, got a little bit under it, and it actually brought a profit if you weren't trying to be too greedy, you know. But here is your signal back, looking for that move back. Now, because this did not breach the high, and on the 4 hour chart, that is, okay, from a 4 hour chart standpoint, because it closed above the previous highs back here, not the trend line, that's, you can't judge it now based on not breaking this high on the next candle, because it's already broken the highs that would put you in a stop. Okay, so that becomes a null and void, and you have to start assuming from that point an upward movement, which is what you got until you get here and you get a fake. Again, it's a second fake to the upside. Again, then you would have to readjust this to now here we are again. And we're closing, we reach a low point that's touching on this area here, which is part of support for this 4 hour chart. Notice I'm emphasizing on this 4 hour chart. So the pound might, based on this 4 hour chart, give us another head fake to the downside and hit the support and come back up again. That's possible. I can't say that it's likely, because in the overall scheme of things, things are bearish. And that we have to remember, and we have to allow it to override a lot of things. But the reason for the 4 hour chart is breaking down the weekly chart into smaller increments, or fractally putting it in a place where you can get better trades. But we come back out to this week, we're bearish. These are bullish looking candle. This bullish looking candle from last week, and then we broke it. But we have not broken any trend lines. We have not broken any trend channels. Yes, we did bounce off of a GAN level, but we came back to another GAN level and closed below it. And actually, we reached in there, and we're right in this, finished out right in this value area here. We're just going to have to look at it and wait for it. But right now, we're still bearish. Now, if we break this high from up here, we might see some things, especially if we can close above it. But, you know, we're bearish, still bearish. You know, got this dragonfly in here at the bottom, but it's such a big move. So what we do is we come back to the 4 hour chart and we play inside of that, where we have more of control and a more microscopic view. That's what I'm looking for. All right, the Kiwi still, just like the Euro and the Aussie, it is in a bearish territory downtrend. What more can I say? For a moment there, the beginning of the week, we thought we might see a little bit of movement to the upside, as did with most of the others. Look, only this one actually made a signal to the upside, and would have brought you a profit if you weren't greedy, like we mentioned back here with the was it the Euro or the Aussie? Yeah, the Aussie, because the Aussie and the Kiwi, they're very similar. And here was the move that broke the trend line with a close and broke the high. So there was a move for bullishness in this short term. Came back, retraced, put in a Fibonacci and you'll see where it retraced. Voila. Right there at the 50s and the 618s. Okay. Created a move to the upside. Got a profit. And of course, once it reached its level of resistance here, it went back down. Now, let's take a look at this and zoom out so you can see the resistance level that was there. Might have to go a little bit deeper because of the 4-hour chart, actually. You're not going to see it as well here, but you can see that this was an area. See these highs that were rejected and see these lows that pushed back to retrace right there, right here, this area right here. It also looks like a 50% retracement of the week on there, from this high to this low from last week. That's about a 50% retracement. So that's all very logical. On to the Canadian dollar. Oh, by the way, yeah, right. We're still bearish territory here as well. Just thought I'd mention that. Let's scan out and make sure we don't see any kind of long-term support area that we're close to right now. Let me get rid of some of these lines so we can see better. And one more. I think the rest of these will be all right. Well, let's get rid of this. This is definitely no longer useful, only with the exception of creating maybe some support resistance areas, which we're not too close to anyway right now. So for the sake of illustration, we need to get rid of some of it. Right now, we are at a 618 retracement level. Right now, we're a little bit below it. We might touch this 8053 Gann area, which looks real strong in terms of an area that has some significance. We'll probably see some reaction to. Yep. Okay. Do you see what I'm showing you here? All right. So this would be a double bottom. 8053. We just went a little bit below this 618, around the 8117, 8120, something like that. 81, yeah. That was the retracement area with 618. Now, we might see that move back. We might see this come back. It might come down to this Gann area and see a little bit of move to the upside for a minute. Only at this point, make some sort of, retracement for another short for the next week after that, maybe. Okay, it takes a minute for things to turn. If this is a turning point, you're gonna need some time to. It's not just gonna turn and start becoming bullish all of us just a sudden. It just doesn't work that way, unless you get some kind of area. No, you know what? Not even if you get some kind of area. When you reach support, it's going to be a minute before it's going to take a few weeks to create or to show a bullish atmosphere. That's what I'm trying to say. I'm not saying that the price won't go up, but you need at least 2 weeks after. From this point, what we're looking at, you're going to need at least next week and the week after, possibly even in the third week, before you can create an uptrend from this point. You understand what I'm saying? If you're not, then you need to take some more classes or. All right, let's move on. Come on, we got to get moving here. The CAD is in a downtrend now on this 4-hour chart. It's moving to the downside right here as of the second day of the week on Tuesday. It broke the trend line on the 4-hour chart, closed and breached, and since then has been on the way down. As far as making any reverse reversal moves back to the upside, because in the long term it's still actually bullish. We don't see it yet. It has not formed. The 4-hour chart has not formed that yet. And if you look at it on the weekly chart, wait a minute, let me get rid of this again, because once we go to that weekly chart, it's going to look silly. Come on now. All right, weekly chart. Remember, we have the Fibonacci timeline set up on the Canadian dollar as well, and it's starting to make some type of movements. But you got to look at this. We're still above the trend line. We're still closed above the trend channels. We have not broken any lows. If we break this low, create some type of inside bar maybe, and then break, that's turning over. But until then, there's still a certain amount of actual bullishness in the weekly long-term chart. But when you come down to the 4-hour, you can see that on the short term, things are moving down. Okay, and we don't see any moves to the upside. We had this candle that broke above the trend channel but didn't breach the high. Here it broke the high, but that was because it was the trend channel, not the trend line. Two different things. Okay, trend channel will always break before a trend line, so it's much more risky. So you put the two together and you work together with that. If you wanted to maybe go get a bullish move or something down here because of its support area or something, and look for it to go up, this is where you start looking for profit taking. Okay. But anyway, let's move on to the franc on the 4-hour chart. It's in its uptrend. Even on the 4-hour, it flatlined for a minute. It broke that channel, and it's moving on into this 94.10 GAN area. Looking at it on a weekly chart, you can see that we're clearly bullish. I mean, come on, we're clearly bullish. We have reached, however, the 618 area, but we're closed above it. We're also in the GAN area of the 94.10. We are bullish. We need to see some correction in this bullishness. The line to the top is real steady, real strong. But we need to see correction for this to continue to be a somewhat healthy bull move. We do have resistance right now from this low and this high, roughly around 94.73. However, let's see what it looked like. Okay, no, we passed it. Okay, so here, yes, this is it. That's the area around that 94.70, 94.86 or so. All right. We need to see correction in that franc. And same thing with this yen, but this yen is this is even stronger move to the upside taking place here. I mean, it's just taking off very strong. Well, it's a real big move. That's the daily. I'm sorry. That's weekly chart. I knew that looked a little long. All right. So what are we going to do in the yen? We're going to continue to be bullish. But I want to give you this real quick point here. Notice how strong this move to the upside is on the yen. And this is just for illustration. I want you to see that, that strategy, that money management strategy that tells us to do multiple contracts. Multiple contracts is beautiful, because the situation like this, when you get this breakout, this move to the upside, yeah, you take your profit on all of it, but you always want to have that one contract that you leave in after you've made your money, so that even if it does stop out, it doesn't hurt you, but it allows you the benefit of continuing with the trend and making that contract extend further and further until you eventually will stop out, but you'll stop out with a profit. I mean, look here. You see this move to the upside. Now, when you took the long, you got to remember, if you took multiple contracts and you take your targets and bam, great, you made your profit. But What about the times when it just keeps going and it won't come back? It won't retrace. You can't get back in. But if you had that contract still there, that one last contract that you just, as it goes on, you put a stop underneath and a stop underneath and then a stop for the next week. And then this week, the stop will be under this low. If you stop out up here, guess what? It's okay because you made a nice profit. Just let it ride until it reaches that point where it fizzles out. But at least you were there for the ride. At least you were there and you made those few hundred pips or so, which turns into a lot of money. So that's what I want to point out about this yen. Even though we're continued bullishness, and even though just like with the franc, it needs to see a correction. It needs to see some place to come back to so that it can continue in its bullishness. It has to have that pattern of movement. So until then, we just want that last contract to ride, and we continue to put in new orders. We don't stop putting in new orders on a daily basis, but that one contract just stays there and it makes money. It's a beautiful thing. It's called money management. Well, I am your Forex University professor here at yourforexuniversity.com, and I genuinely hope that you are profitable this week. And until then, we'll come back and we'll see you next week.